Hey traders, what's going on here? We're looking at the pound JPY. I just want to do a little recap of last week. I didn't take too much trades last week. I wasn't really active. I took about 3 trades. One was a winner, one was a loser, and one was just about break even. So I just want to give some perspective, not only for you but for me as well, on how the market formed later on, how the market how the market set up and developed later on, and everything like that. Okay, so one of the first trades I actually ended up taking was, I believe it was the GJ short. Okay, no, my bad. So we took one trade on Euro JPY, one trade on Pound JPY, and one trade on gold. Okay, so let me just show this. I didn't really provide much detail for the analysis here. These are all personal, and so I don't really have to go through and do all that. So basically, what we're looking at here, I'm also going to pull up the other chart. Okay, and this is basically what it looks like. This is the after effects. We took this from the 4-hour time frame, and we're just basically going through the Fibonacci 127, the 161, and everything just like that, looking for rejection at these areas, the areas of interest, resistance. All that has to be matched up in there. If you haven't checked out the video before, I'm going to try to link it right here, where I go through and I explain this method. And then there's also the video with the trading nut where I go through and I actually get to display this in the trader versus trader challenge. Okay, so here's our setup on the Euro JPY market structure. If we can zoom out here, market structure is on the higher high. Right now, we just broke down into a lower low structure with this move right here. Break below, break back above, spot getting the 127 in this area as well based on this move. I'll check it out just now, but I'm pretty sure. And then price push to the downside. And so from price pushing to the downside, I'm expecting a continuation of this move. And there was on the pullback back to this resistance area, this conflict area, and the 127 was right in that area as well. And little to notice as well is that the candles were actually slowing down. So here we get a really big candle. We're most likely to see with a lot of traders is when we have this resistance area that was here, we would see price rise up into it, look for rejection, and go back to the downside. Nothing's wrong with this, but in this case here, we never even get a rejection of the resistance area. So depending on your plan, it depends on whether you take a trade there or not. This is a liquid area because of this resistance area that's forming. We know that a lot of stop losses are placed right on the other side and things just of that nature. So getting the rejection, I had my entry placed right at the T because this is how this method works, and the stop loss is going to be placed on the intersecting candle high. So from there, we spent about 3 candles battling that area, just about 12 hours if my math is right, and we actually head straight down into the profit area. So at this first mark, once we actually got to close right below this is when I actually moved my trade to break even. The second marker where I updated my trade was right here. So the way I go through and explain this method in the videos as well is I'm looking to move my stop loss, cover myself, secure myself. Once we break past this 1 marker, the 50 marker, the 0 marker, and TP is normally at the negative 0.27. Okay. Now this is basically what happened. The TP was taken out in this case, which is a really good trade. But once we broke past this area of price, with these 2 candles look like it was slowing down, so I just moved my stop loss to just above the 50% marker, which was about risk 1 to gain 5. Here you can see we risked just about 11 pips on this to gain 118. So really good trade right there. This is the highlight of the week. This is the trade that basically puts us ahead for our other 2 week trades. So the next one that we actually took a trade on was gold. And this is the analysis here. Now, I wasn't really active last week, though. When I did happen to look at the charts at this point in time, I seen that this whole setup was occurring, okay? Now, I would have loved to take the trade on this 127, but I didn't. I missed it, and I only caught the price when it was right around in this area again, and I'm seeing price just consolidate. I didn't get into the market over here, but as I seen the market just continue to consolidate and consolidate and consolidate, I'm like, you know what? Let me look into getting into this area. So this is not the ideal trade setup for a number of reasons, and I hope to explain this pretty well here. So basically, to take a trade from the 127 based on this structure high to the structure low, and then we have the 127. In fact, this area as well, because this is the next seller's rejection, the seller's trap in the market. Before we get a 161 rejection, look to get back to the downside, okay? And stop loss, I don't really want to touch on what I did not do, so let's just keep moving forward. Price came back to this area, and basically the way that we can look at price is we know our best entry is going to be on that liquidity grab, which is right there, which we missed. Price came back below and now is battling it, right? And we're supposed to drop back to the support area. That's how price moves. It doesn't move like that all the time, but this is the move that we can work with to try to capitalize on. So I ended up taking my trade on the rejection that was happening here. I actually took this from the 1 hour. And so what had happened was when we actually got this negative candle, this red candle, white in this case, but when this red candle, stop loss went on the other side of the zone just to cover over this area and just cover around these areas here. Now price broke down into new lower lows, which is a good sign for market structure and everything like that. And so from there on, I realized that I'm already late to the party in this case. And so what I want to do is just bring my stop loss to break even. I should have entered over here from our would-be entry at the 127. We passed the 1 marker, so we would have been break even over in this area here, and we would have never even crossed the 50 point to begin with. So my stop loss realistically should be around here. So that's the reason why I was so aggressive in this case, because I'm late to the market, to just put my stop loss right here and just cover just a few pips, I believe. Yeah, so just about 9, and you have to account for spread and things just like that. So realistically, it came and stopped me out right around here, and then we can see that it ultimately would have went back and hit the stop loss if I did not secure it. So it's just to take in mind what happened here. TP of 300 pips not hit, 81% stop loss. And you got to remember that this is risk 1 to gain 3.6, so it's still risk 2% or less to gain 6% or more in this case, right? So that's how trade number 2 worked out for the week. Now, trade number 3, which we seen in the beginning, was GJ. Now, you got to understand something about trading where it's everything works some of the time, okay? So here we have our analysis. If we go to the weekly time frame, they would have been better to show you on here this as well. So what I was seeing happening with the previous candle being a negative candle, and this week's candle was the buys I was going with for negative week as well. I was more so looking for a retest of the support area before going back to the upside. We can still get that. It just didn't happen at the point in time that I was actually looking to take a trade back to the downside. Now, basically what we actually have here is the same exact structure that we've seen on Euro JPY to take basically a similar trade to that, swing high to swing low to get the measurements. Now, the 127 doesn't interact with anything else in this area. The 161 does. So that's the area that I was looking for. I should have taken the trade on the liquidity grab on the other side of the resistance, which I didn't. I was pretty satisfied with the risk reward that I was going to get on this trade and everything like that. So I just let it run like this, and we ended up hitting our stop loss. But this is basically the structure. What I would say didn't go right with this trade was mainly, for one, the stop loss got hit. But if you see the way that we ran it on Euro JPY, if I can just go back to this, what we have here is a support that turned into resistance, and we got a rejection. So what we're always looking for is the buyer's trap or the seller's trap at the support and resistance area before taking a trade. Maybe I can find a really good example like right here where we get a rejection of the support, which gives us the buyer's trap before price goes back through the floor, goes back through the support, taking all their orders before pushing back to the upside. Same thing goes right here where we can apply our Fibonacci from the swing high to the swing low, and we go into the 127 perfectly right to the downside before we can see the structure and everything happening, the structure shifting, and we get a nice liquidity grab right above. So to get this better explained and everything like that, make sure you watch the refresher video up on the TPA channel. And that's really it, guys. You got to understand the risk to reward. So we got one trade just about break even. If I go to 4 hour, we got one trade just about break even, and we have pound JPY, which occurred a 2% loss of negative 17 pips, call it. And here we have a risk 1 to gain 11, call it, or risk 1 to gain 10, we can call it. And this one we risk 2% to gain to 20% basically. And we actually, one thing worth noting is we actually came down to the secondary target area, which is the negative 61. So these two things, these two areas, these negatives and positives of the 127 and 161 are very key zones in the market. You really have to Google what these numbers mean to get some type of symbolism behind them. But that's all I really want to say for this video, guys. Thank you for tuning in. Make sure you guys get good risk to rewards on trading. If there is a holy grail to trading, it is getting good risk to rewards on your tradings. Thank you guys for tuning into this video. I'll catch you in the next one.